Hey, thanks for tuning in. In this video, we're going to do a weekend review for the week ending October 22nd. New all-time high in SPY. Definitely not bearish. From a structure standpoint, it's a bit challenging to tell you what we have, right? Everyone was calling for this little rising wedge breakdown. Target 400, 415. Well, that didn't happen, right? All she did was fall into a rising SMA 20, closed 1 week below, recaptured. That right there is the bear trap. New all-time highs. That being said, the last time before September that the 20 was touched was March. You're talking about 9 months. Okay. So come down to the 20 again in a week or two, not the same trade. That being said, this PPO here, this is definitely worth pointing out. Reset. So this whole wave is over. This was the peak. This is your wave 3. A, B, C, D, E, I don't know. Something like that. 1, 2, 3, 4, 5, 6, 7. Maybe an extended wave 5. I don't really know. Doesn't really matter, does it? Right. That being said, there are some obvious channels here that you can start to draw. Come down to there. Extend this out. And yeah, I don't know why she can't now go to 480 and then do this little thing again. You see what she does here, where they come down, pretend they're going to die, then they go right to the top and they just grind the top. Why can't that happen into the end of the year? Certainly can. And the momentum is showing us here that we have bottom and we're trying to go sideways to curl up. And the PPO is only at 2. Right? Does she have to go negative? Maybe. Does she have to get to the zero line? Maybe. We'll just play that one by ear. The histogram on the daily is showing that the bulls are running out of steam, and the likelihood that we do find some consolidation pattern here is pretty good. This was the inverse head and shoulders that broke out. We did have a nice little descending channel here that was set to take price all the way down to 400 by November 15th. But the demand at this volume shelf kept price in balance. There was no imbalance to the downside. That being said, when you have an all-time high and you do bottom, the first logical place to test is the previous all-time high. Well, they did that. They found some sellers. And as you can see, the volume here is declining, which not the end of the world. But the bull volume ended and the bear volume came back. So what we want to see is, does this PPO bearish divergence hold? And in order for that to happen, the bears will not allow many more all-time highs, and then capture of the 5 and 10. That will force this to curl over, come back down to the zero line, and force a divergence to take place. There is a divergence here, but it's very steep. Just like this one here. And these steep ones tend to break. And when this one broke, right, on a new high, breaking this uptrend, it did lead to a reset to the zero line. And then another divergence. And this is when you could start getting aggressive again during this whole move here. And when they didn't break this divergent high, that was a red flag, because it meant that this type of play, right, still in. Coming back to here, false break, boom. And that led to liquidation. So now I'm using the PPO here. We can definitely draw it nice and tight like that. Are we at resistance, or are we going to break out? We'll see. Just keep in mind, this is after hours on. That's a nasty doji. I don't really like that look. It is a reversal. However, you're still sitting above this trend, and was expected. That being the case, it looks an awful lot like this one, and that led to this decline here. And to me, this could easily be a 1, 2, 3, 4, 5 wave move down. Then looking for an ABC up. 1, 2, 3, 4, 5. That may have just completed, and now we get this 5 wave move down again, symmetrical to this one here, and what will likely put in what's called an expanded flat. So we'll see. I don't really have a bias here. I don't really care. The bias is to the upside. I am long SPY correlated names, and some of them did take a beating on Friday. Speaking of them, Shop is a great one, but we were looking for sellers here. A bit interesting that they closed 3 sessions above the 100 or the 80 and could not hold, and did close below the 10. Not the best look. Gave back the 40. Again, though, when you're below a declining 20 and you capture the 20 and you capture a declining 40, there is a high probability that you're going to revisit the 20 and the 10. Right? When the slope changes to up, like come back down to this period here, just to see what I'm talking about. Right? 10, 20, 40, all sloping down here. Recapture, come back up to the high, right? Set a lower high relative to the previous high. This is what creates the confusion in the market. Are the bears in control? Are the bulls in control? Come down, set yourself this little ABC structure, and let this bull flag continue. Another ABC structure, and one more bull flag. And each one was kind of weaker, or at least the 5th was the weakest. Either way, that's what we're looking for here. All right, and now what we do have is overlapping structure here, here. So this overlaps this. This coming down could certainly be a retracement of this move. Right, but look how much she's retraced, 76%. So it's possible, but again, this could be a big bull trap like we have in SPY. So just keep an eye out. I'm not really confident one way or the other. And this configuration, just like the configuration on SPY, is pointing down. So it's not the most bullish configuration like here, for example, or even here, or here, or here. So that being the case, it's entirely possible that I don't have this count correct, and she is going to come all the way back down and tag the lower end of the channel again, or at least tag 1278. Sorry, 1309.75, something like that. Yeah, I think that's about right. Okay, let's check out the Qs. This is a bit problematic. Sorry, I can't hit the keyboard this morning. So we have no divergence here. And this structure looks a bit extended to me for sure. So 1, 2, 3, 4, 5. Where's my ABC? All right, so that doesn't seem correct. A, B, C, running flat. That definitely seems correct. A, B, C, maybe. And then from here, we do our looking for one more high. Something like that. That's definitely possible. And as you can see, each of these highs is on lower momentum. not the end of the world, right? This is what the super strong stocks do. They reset in PPO back to the zero line while price continues to go sideways to up. That being said, look what ultimately follows with these bearish divergences is this puke, right? This here, no divergence at all in a big puke. But that set up that divergence there. And so this is the high. And the way I look at these, so that means this has to be some wave 3 high. This looks like some ending diagonal. But what do I know? It's above all the moving averages. The trend is your friend. There's no reason to overthink this. The 20 continues to hold until you find acceptance below the 20. You can buy the dip. It is the high probability bet. That being said, we have touched the 20 for the entire course of the last 13 months. That has been the trend line. When that breaks, look out below. Right? You're not going to just go to the 200. You're going to go well below the 200. Like was done back in COVID. Yeah. You're going to break through it for sure. So that's just something to watch out for. SMH is definitely weaker than QQQ, and QQQ is weaker than SPY. That is the order that I see right now. And I don't see SMH doing anything positive here until she can find acceptance above 272. And then even then, it's only targeting a 3% gain. And the downside risk is 4% back to the 20. And 10% worst case scenario. So I don't really see why anyone would want to buy this. The PPO is slanted down, still has not gotten to the zero line. The histogram is showing an acceleration. Volume is, as price goes higher, volume is going lower. So, the trapped longs that are right here at 272.38 all the way down to 252, they want out on first touch, and that's why you got this wick. And what is quite unfortunate for a bull in the semi space is you have this head and shoulders pattern. So big old gap, very unhealthy gap. At some point, they're going to come down to 233, and it's going to feel like the world is ending, and that's going to be the next best swing. And to me, this is still in some just big old consolidation, right? Ascending channel, buy the dip, but we're at the top of the channel. You don't buy the dip at the top of the channel. And you look at other names within this ETF, boom, another all-time high in NVIDIA on your third bearish divergence. Okay, so one of two things is going to happen here. Right, here's your head and shoulders here as well. They come down, they break this neckline, this thing is done. But until that happens, she is in an ascending channel, and the odds is that she could come all the way up to 250, right, and finish this 5-wave move up before she does a much larger decline. And as you can see, she broke the bullish divergence that was here. So this is a clue, right? Even though the low here was at 135, the low here was at 198, and it took the momentum and histogram lower than the low from May. So that's definitely a hidden bearish divergence and something to take note of. This is a very obvious negative divergence, and you're looking for sellers to come in and put in a lower histogram, lower PPO for the third time now. And notice it happens at wave 3 in each one of these. Wave 3 here, wave 5, reset, happens here, boom, reset, likely happen here in the wave 3. So this is where your histogram's already going sideways. You'll start to see PPO curl go down like this, and that will be the sign that this NVIDIA trade is done. And if you look at this trade has been on since June 2019. So it's a bit long in the tooth in my opinion, but these things can persist a lot longer than anyone thinks, myself included. And this is a very obvious wave 5. Good luck. Have fun. Wave 3 of 3 high, all the volume, highest momentum. Boom. Straight lower. 1, 2, 3, 4, 5. I mean, it's beautiful Elliott wave stuff. It's a beautiful trend. It's a great story of a fundamental company improving its intrinsic value, and over time, as the market reprices, continues to reprice higher. It's a great story, but it's coming to an end. Sorry. That's my opinion. I'm sticking to it until we see some change in this momentum and some change in this momentum, right? Because this is just too textbook. And we're going back to a monthly chart, really, which is driving this again. So, we'll see how this one plays out. Still above all the moving averages. That's all that matters. There's nothing to be concerned with if you're a bull until she's below 200. Okay? If she's below $200, you got a problem. And the reality is, you'll actually get a sign long before that. These moving averages, the 40, losing the 40 again, it's not just going to recapture, right? The reason it recaptured is because this was the first touch of the 100 or 80 since May. So of course you had buyers there. And this time the number of buyers there is a lot less than last time. So the things that I look out for, those are the things that I watch, and I certainly see SMH as the weakest sector. QQQ is the second weakest. SPY is the strongest. And then IWM is the second strongest. Okay, and we'll talk about IWM now and wrap up this video. Maybe we'll get into gold. So this is the line in the sand, right? 229 was the gap. They filled that gap. As soon as they filled this gap, came up close, the bears said, look, let's get short again. Boom. So here's where we are. We're going to get rid of all these higher lows. Like, this is quite obvious. This is stuff that you just have to track, right? A clear pivot, a lower high, right? A higher high, lower high, lower low, lower high, higher low, higher high, higher low, lower high, higher low, lower high, higher low, higher high. So you get these changing characters. And when that happens, if you see the PPO like this, or when they broke this trend here, same problem, right? No divergence, accelerating down. This is a very risky play. This was the better buy in August because you had the low to trade against. You had this low back here to trade against here as well, don't get me wrong, but the divergence was bearish. It was not a positive divergence. You want to be buying a positive divergence. If you're buying this C low of an ABC flat, you want to see a divergence. Okay, so that being said, you now have a break in this pattern and an acceleration in the PPO, our momentum indicator. So let's remove all of these arrows and let's do some basic technical analysis. Right? We've got a lot of trapped market participants all up here. Okay, so back in February, price came up to this level, 229s, sold off. Came up, sold off. Came up, sold off. Came up, sold off. You see what's happening? Okay, so here we are again, trying to capture. This time, we're trying to capture with a series of higher lows and higher highs. Maybe it means something, maybe it doesn't. This is the type of posture I want to see for a swing trade. A divergence, a positive bullish divergence, a negative bearish divergence. The negative bearish divergence breaks. A nice angle of attack here. The histogram continues its way above all the moving averages. A brand new trend. Look at where price was back here relative to all the moving averages. Look at where the moving averages were here. Look at where they were here. Look at where they were here. Now look at where they are. Okay, you just had the 10 cross above the 40, the 20 cross above, the 10 cross above the 20, 20 cross above the 40, the 200, the 80. They're all right at the bottom. The distance between the 40 and the 200 is 0.5%. If your distance to invalidation, i.e. acceptance below the moving averages, acceptance below this gap fill, is your invalidation, for new entries this week, your invalidation is 2%. Just to give you some context. Invalidation for SPY, the strongest of the markets, 2.5%. But remember, this gap down here is 4% away. This is the POC. So really, this is your invalidation. And if you really want to talk about the pattern that I called out earlier in ABC, you'd say, well, acceptance below here is really what we're looking at. And then, just like all our ABC patterns, the 618, the 1, and the 1236 can act as the target for the pattern completing. And so when I look at this and I see this, 1, 2, 3, 4, 5, 6, 7, 8 days up, what do you think is going to come from this? You have an outside bearish reversal. If you close below 451.05, then the probability that something like this is coming increases dramatically. And maybe it's just another flat from here, and this is your 1, 2, 3, 4, and some bigger extended wave 5 comes. It doesn't really matter. We just had 7 up days and the first red day, the first sign of sellers. Do you think they're just going to disappear on Monday? Probably not. All right. So if you look at the distance towards risk and measure it really as a function to 426, that's 5.5% away. IWM's risk for new entries is 2%. I mean, obviously, if price gets back below this breakout, this isn't a contracting breakout. This is a bull trap, and price is heading way lower. What would likely happen is something like this. All right, that's the reality, and and that can still happen. Boom, boom, boom. I don't see why not. So what needs to happen with IWM to negate that is they need to find acceptance above 229, the same level that's been a problem the whole time. And if the 200 has been the demand line, which is kind of obvious now, or at minimum the 40 on the weekly, which is what I was playing when I entered in July, the PPO is reset to the 0 line. It is now curling up. The histogram is curled. We just need a new high on some volume, and this thing is poised to rip. And I mean rip. This is like the measured target. And this isn't really an exaggeration. This is a high and tight bull flag. That's what it is. And the range here is like 9 months. This is great. This is a high base. This is, cup and handle, whatever you want to call this. It doesn't matter. If they get above 230s, she's going to go. And if they give up and fail up here, what's very likely is something like this is going on. And really, this is all just the D. That's how I would view this. So if they don't find acceptance above, then this is your D, and we're heading down to put in an E sometime by the end of the year, when the rest of the corrections in SPY, SMH, and QQQ complete, when their PPOs reset to the 0 line and start to cross up. But you see why IWM is a leading market indicator. It topped here in February. It's reset now. If she's going to keep going, everything will go higher. If she falls down everything will go lower. And really, this couldn't be a better look. This is as good as it gets, in my opinion, for a new entry close to risk. My entry from here is still up about 10-12% because I'm playing TNA. I trimmed some over here and did not add back. It's still a hefty size, and we're just going to let it work. Right? We don't need to be micromanaging this trade. The way that you trade these rectangles is very, very easy. Don't overcomplicate it. You never do anything here. You only buy here, and you only sell here. Okay? And if they don't get up here, you don't do anything. And if they don't get down here, you don't do anything. That's about it. And if you don't like that trade, don't take this trade. Go find the next thing that's breaking out that will trap you, because most of the breakouts have failed. Why? Because the market has been correcting for some time. Even ServiceNow, one of the best companies in SPY, had a breakout that failed. This breakout here, boom, came all the way back to the breakout area. All the way back. Now, still marching higher, but this is hardly what a breakout player wants. 100% retrace? No. So the markets is definitely weak, and the strongest names are definitely weak. EMPH is a name I like as well. And if I am correct, what you'll likely see with the market is that IWM will lead higher, SPY will be right behind, QQQ will lag, and then SMH will be the weakest for some time. Why? I don't know. SMH has been the strongest since June. Maybe they're going to rotate out. Some names I'm watching. I do like EMPH. Dips into this demand box is exactly what we want to see. I've got my alert set. I would love to buy this company this week. One trade I will look at here. This is very interesting to me. So we've got the breakout. Back underneath. Back at POC. It's hard to call this bearish because this is still your inverse head and shoulders. We just don't have the breakout yet. And the momentum will come above 86. Now, there is real risk that they come and break this low. That's definitely setting up now. What is also true, though, not to only look at the bear side, what is this? This is a series of higher lows and higher highs. Low, high, 71.15, 71.09. So they broke it. All right, so something happened here. And now she went higher again. A, B, C, something like that. Right? And look, I'm giving all this to you in real time. I haven't looked at this. This is just what I see right now and how my brain thinks about the market. Okay? Boom. I don't know why that can't happen. That looks pretty symmetrical to me. Still maintains this entire look. Still maintains the larger ABC look. Right? So this is a real steep to its long in time and price. Yeah, it would be doing a 76 retrace. Right now it's done a 618. So, has satisfied the pattern. We just don't see an impulsive move higher yet. But we do have still the divergence that is required for a bottom. And we did have the PPO cross after resetting below, which is all very bullish. And now we have a loss of all the moving averages except the 100. We did, though, fill 1 and 2 different gaps. That being said, there's still a gap here, there's still a gap here, and there's still a gap down here. So coming into the week, this name is a very nice short setup or a very nice long setup. And I don't really know. I can't tell you. As I said, this could be a big bear flag. This could also just be a big base, you know, where they're accumulating. And when it got a bit extended, they just threw it back in. Okay. Another one I'm watching is Airbnb. So this one's at risk of getting real ugly. I see ABC down, see ABC up. 1, 2, 3, 4, something like that. That should happen. Invalidation is 157.41. My stop is in at 157.41. Coming back down would be very bad. I don't see why they would do that. They kind of need to hold if this pattern is to continue. Which is what I see. So, and the weekly supports this, right? We have the histogram cooling off a little bit. PPO definitely above 0. Very bullish, still above the 10, right? Still a bullish wedge. As long as she remains above 159.44, there is a high probability that she marches higher. 1, 2, 3, 4 consolidation weeks now inside this bullish wedge. She could rip next week. She could come all the way back down and test the low of this again. But coming much lower than 159 would be it for me. And I would be out of this trade. Bought down here. We don't have the sell signal yet on the weekly. We were given the sell signal on the daily up in this congestion area. Plenty of area to take, plenty of time to take profit. You can still take profit on Monday at 166. The close of 166.57, assuming she opens where she closes. So, you know, you can certainly have taken profit, enjoyed this nice little run, 18%, and wait for the next setup. My stop has always been here at 157.41, so I've already raised my stop up from my entry back here. Okay, I've been moving my stop up. My stop is up now 13% from where I bought. Right, when I bought, the stop was down here. When the trade moved in my favor, the stop went to break even. Right, this is how it works. Now that it's profitable trade, the stop for the entire position is moved up to the invalidation of the structure. If this is really a 1, 2, 3, 4, 5, we have a long way to go. This is simply wave 3, and we're just pulling back into a rising 40, and the 200 is just now forming. And to me, this looks like a textbook ABC flat. So go down, break 160 in reverse, and you'll have yourself a new impulse wave higher, and that will be where I start to trim. Up here at about 186. That's my aggressive trim. Let's take a look at gold and then wrap this video up. It's a bit long in the tooth. GDX. We got the conservative buy alert. Still in a descending channel. Still in a series of lower highs and lower lows. Do we have a bottom? That's the question. Are we reversing? This is very interesting. So during the COVID low, she bottomed at the 40. Here we are, GDX monthly at the 40 at 29. Now, PPO still very bearish. Still below a declining 10. Still below a declining 5. Still below a neutral 20. Right? Not the best look. And from a symmetrical standpoint, she could have completed that at the 618, but this to me seems like a bit more symmetrical. Right? Why? Because there's your A, there's your B, there's your C. Whether you call it a WXY or whatever, it doesn't matter to me. And when I look at the weekly, I'm kind of getting the same picture. Did we just get a rejection at the 40 and a declining 20? Or are we going to get a PPO cross next week? I don't really know. We filled the gap on the weekly and closed below it. So not the best. Declining 200. We'll see. My only reason I'm bringing this up would be if this is some type of structure. Again, this is the 8 wave move, 5 up, 3 down that we're always looking for to go long. Okay. If we don't see this, how can we go long? And right now, it looks like we're about to start a pullback in gold. Sellers showed up on Friday. We'll end on the VIX. Came down, filled the gap, found buyers. Filled the gap, found buyers. Okay, 1447's the low. You break that, then we're going to get what I want, right? Which is down here, the 11s, 12s. If you see the VIX at 11, 12, or even 1347, it's probably lower than 13. But if you see it down there, it's certainly a buy. And quite frankly, it was a buy on Friday. All right. And do we have the divergence here? We do. All right. This is the third low now. A third low, right? Do you see what's happening with the price? Another low in price and another higher low in momentum. All right. So, and we do have this, new high here in price, new high here in price. So it makes sense to have a higher high in momentum. If they come down here and they don't break this low and they start to reverse at this gap fill, you need to be very cautious as to your long exposure. That being said, I'm still anticipating this come down and break the $12 range, and that's when she reverses. That's all I have for this video. Thanks for watching. I'll see you in the next one.